Hi, this is Dan Ansell, Prudential California Realty. Today is Monday, August 30th. Here's what's going on in the real estate headlines. First of all, median home prices up in most U.S. cities. That's for the sort of first half of the year there, and not unexpected. It was largely due to people taking advantage of the federal tax credits there for buyers and first-time buyers there. So we saw a surge of activity, a lot of absorption of inventory. That's behind us now, so we can get rid of that one there. Mortgage rates hit all-time low, 4.44%. Do not disturb. So again, that's what's really keeping the market as stable as it is historically low interest rates, both at the conforming levels and at jumbo levels. So the jumbo levels, that's a new thing in the market, the introduction of lenders actually loaning on high-end properties. Thank goodness, happy to see it. Similar to that, home refinancing surges as mortgage rates stay low. Homeowners are realizing that interest rates are very low. They're willing to refinance, get a lower payment on their home loan there, as long as they qualify there. So that's putting more money in consumers' pockets there, as they can spend less money on their mortgage payment each month there. So good news on that. Here's where this news starts to get a little more disappointing though. Home sales dropped by 21% in July. This is a California statistic, so compared to a July a year ago, which really wasn't that good, the number of sales of existing homes, not new homes, but existing homes, dropped 21% there. Huge decline. Not unexpected though. Again, there was a big rush of activity for home buyers to get in under the wire for these, to take advantage of the federal tax credits. People are not taking advantage of the state tax credits. California has implemented their own state tax credits, but they haven't publicized them well, and it really hasn't given the boost to the home buyer, to the real estate market that we'd like to see. It's a really good credit. People aren't very aware of it. They're not taking advantage of it. It's not having much impact. Here's one on a nationwide basis here. This is where it gets really bleak. Home sales plunged to lowest level in 15 years. And this is for previously occupied homes there. They say it's the largest monthly drop in the 4 decades since they've been keeping track of this. So basically, once the federal home tax credit expired, the amount of sales just dropped off a cliff. So very disheartening to see, not unexpected to see that, but very disheartening. And it's got the government really scratching their heads, because unemployment is still a huge problem. It's ranging around 12.3% nationwide right now. And without jobs, people can't afford to keep their homes. Without the real estate market coming back, people don't have jobs. So they're really tied together. They can't figure out, it's like a chicken and egg, which one's got to come first, more jobs or more stable real estate market. They definitely are tied together. It's been a real problem there. Here's the worst of them all. 1 in 10 households is facing foreclosure. This is on a nationwide basis there. To have 1 in 10 households be at some level of default there means there are millions of homes that are potentially in the foreclosure pipeline. What does that mean? That means that it's going to continue to drag down the economy and the real estate market. Foreclosed homes tend to sell for less than owner-occupied homes there. The banks, they're not usually as good a condition. The banks want to sell them quickly. So they bring down the values of homes around them there. So it becomes very self-fulfilling. As more homes around them are affected, some people who are just hanging on can't hang on anymore. They've lost the equity in their home, or they're disheartened by it. So big problem. Unemployment, foreclosures, definitely tied together. Big problem. Thank goodness interest rates are low. Stock market is still sort of holding in right around 10,000. They seem to be optimistic that the Fed is going to step in, help in any way that they can, although they've been very vague about how they can help to really stabilize things and give the economy a shot in the arm there. So not that really attractive of news out there on a nationwide basis, but again, not completely unexpected after the expiration of the federal tax credit. So that's where we're at right now with real estate. Hopefully the next one will have a little bit of positive news. There's got to be something good going on out there. So we'll keep you posted.